What's going on, everyone? James Livingston here, back again, bringing you guys another trading video. Today we are going to be diving into the world of Forex, specifically gold, and going over kind of a weekly analysis, how I would do it, top down, starting out in the larger time frames, moving down to my execution time frames, and kind of just running you guys through my thought process. This is really not just with Forex. I do this with every single stock that I look into, whether it's on the stock market, the New York Stock Exchange, futures, Forex, even crypto, whatever I'm looking at. This is exactly my methodology going into it, to kind of just understand what's going on, and what I can expect to happen, or have an idea to happen. So as of right now, looking at gold here, we can see that it's clearly on an uptrend. It's been on an uptrend for quite some time. The EMAs that I do have on right now are the 20 EMA as well as the 200 EMA. But to be honest, even right now, I'm probably going to just turn those off and literally just look at this. I don't have copy. Just look at this from a technical standpoint without the assistance of them right now, because I just want to know what's going on with price action, right? So as of right now, weekly wise, the last candle just closed out outside. So it's basically an outside candle. So if you don't know what an outside candle is, it's when a candle engulfs the high and the low of the prior candle. In this case, this is a weekly setup, so this holds a little bit more weight to me, being that we were just in such a heavy uptrend, right? We had pushed from lows of 2600 about 3 months back, and it went all the way up to highs, I believe, of, I don't know if you're gonna be able to see it because my face cam, but 255, 29.55. So literally a $350 some move, or I think in pips that would be, correct me if I'm wrong, but I'm pretty sure it would be like 3,500 pips, like 3,500 pips. Just insane move in the course of about 2 to 3 months. On gold. So right now, outside candle setup with volume. This to me is signaling potential for a little bit of a pullback. I'm not saying anything crazy. It might only even take out the low of this candle and then go back up. But as of right now, to me, it's signaling that there could be a change in direction soon, whether it be Sunday evening into Monday, or at all this week. I do believe that there could be a correction or a little bit more of a move down coming soon. We did just find ourselves settling across on, looks like, this daily support level right down at the 2830s. So we are finding a little bit of support there where we previously had it before the move up. So it's worth noting that at the end of the day there, towards the end of the day on Friday, we did see an unexpected kind of pop by the whole market. After such a heavy drop earlier in the day on Friday. It was quite the move on the last day of the month. But that's another thing. Let's check out the monthly, just because we did close out a monthly candle, just to kind of see what happened here. So the monthly candle is still looking overall pretty bullish. I don't think that gold is necessarily on a huge correction just yet. At least there's no indicators towards that just yet. But if we go back to the daily, again, we can see that we bounced off of a short-term kind of support here, or more of a long-term support, I guess you could call it, a multi-week support, just due to this price action right here being about 3 weeks worth, and then the fourth week, so about a month's worth of price action and data here. Nice to see a little bit of a bounce there. That's definitely hopeful, at least for the beginning half of this week, or the beginning part of it. So go on the 4-hour time frame. Now we can start to see where the structure is lying, right? So we did have consistent uptrend. Now we're seeing this previous low right over here used to be a resistance. We can actually identify this as a 4-hour key level. So we put it right there. I want to lock it into place, and I'm going to write 4-hour key level, just like that. And we'll keep it. I do my 4 hours as purple, and it's gonna be hard to see on my screen here, but I do have I know the face cam is in your way a little bit, but along the side here, I do have a 4-hour key level at 2882, as you can see right here. I'm just noticing that, again, we bounced off of that exact spot right over here once before, and then we broke out of it right here, came back down, touched it once in here, little wick below, we call that an overlap, as well as another level touch here almost to the T. Once we approach this area again, you can see we had the absolute meltdown straight through it, and I'm looking at potential for price action to want to draw back up to it to kind of create us a little bit of a, you know, kind of break and retest style of a pattern. Let's see here. This is kind of what I'm expecting here. Maybe, you know, push up to here, come back down, settle as support there, come back up to here, kind of consolidate up to that area, and then followed by, you know, potential move to the downside to test it again and potentially break it. So, oh, whoops, I want to drag that one back. All right, how do I get out of this? There we go. But anyways, you get the general gist. That's kind of what I'm looking at there. I'll move my screen over so you can see a little bit better. But essentially, you know, a break, come back down, touch this previous support that we had already, just like that. We've retested it now on Friday. Let's see if it can hold, if it can give us a nice little bounce up. But I do think the 2880, somewhere in that 2860 to 2880 pocket, I feel like is going to get touched before we can have a much larger move to the downside. So looking at the 4-hour kind of bias right now, I would say that we are at the moment bullish in terms of buyers are showing some bounce strength. But I think that on the larger weekly, daily, you know, even part of this 4-hour, we can already see the structure shift starting to happen, right? We had the higher lows, higher highs, just like that, and now we're starting to see equal high, double top style, and we are breaking beneath this previous low, settled right there, settled right here, settled right here. So we're starting a little bit of a downtrend here in the past 4 days. So it's important to note, though, again, gold has been running for quite some time, so it does need to have these pullbacks to be healthy. So even a pullback to here, not too scary just yet. I think that we could pump back up into the high 2800s, and then at that point, that's where we're going to really probably find out if this is a true downtrend or if the buyers can get some strength and start to push through this 4-hour key level. So that's kind of the idea right now. I'm thinking at the moment, again, I'm leaning more towards that this will probably push out the gate here Sunday evening. Probably get a nice little push over that 2860s right here. Or that would be generally the first target, I would say, 2860s. And then from there, we've really just got all this gap kind of area, not gap area, but, you know, 2860 to 2880 range that I'd like to see the buyers push up into to at least have a chance at potentially, you know, popping this back up through and continuing the uptrend. But again, the weekly time frame definitely showed us a little bit more of potential for this thing to take over lows first. So possibly taking out the low of last week, which would be right here. We'll label that previous week low. So we got the previous week low right there. I know you can't see it because of my face cam, but right here, this teal colored line sitting at 2830. And then we have the next spot that I would map out here. Also, you know, knowing that this 2865 is kind of that spot where if we break above it, you know, we've had some consolidation in this area where price action was trying to, but it could not get above it. So if we do get above it, I think the next logical spot for us to target is that 4-hour key level. It's also just a hair below our previous day high, just like that. So we got our previous week low down here, so we understand that the whole last week, the lowest we ever went was down here at this spot. So logically speaking, as we saw that weekly time frame, when we saw the outside bar candle, the overlapping of the high and the low from the prior week, it's shaping up to show us that if we would break that previous week low, there's a good chance that we're going to go much lower. So that's why this previous week low being marked off here is good for us to just understand where we stand as far as if price action breaks that, we're likely to get a pretty high reward move out of it. So it's just good to understand that. You know, same thing with the previous day high. If you break daily high, the logical sense is that you're going to go higher. So if we look at that daily candle, if we would break that high right here, there's a good chance that we can go up and fill up through this previous Thursday's really bearish candle. So we could possibly go back over 2,900. I would say if you're looking at the 4-hour time frame here, just to kind of get a bigger view, if we would break that previous day high right here, the next logical spot would be to target the 2 days prior high. So we're talking right around here. I'd probably target the open price personally. I just think that the opening price tends to work out better for a price target. Same thing with the closing price over the wicks. I feel like, you know, sometimes those wicks, you want it to get into that wick range, but you also are going to want it to get to the top of it. So set a take profit at about the opening price of a prior day or a closing price of a prior day. Just a little piece of advice from me. You'll find that you'll actually hit your take profit more often than not. So that one's sitting up there at 29.16. So let's just go ahead and mark off 2 days. We'll put a 2-day 2D previous high or open. So you can label this however you want to. This just helps me when I can see, like, okay, yep, that's the 2-day prior open, you know, or that's the previous day high. You know, that's a 4-hour key level. It's been shown to be a 4-hour key level across, you know, looking back, etc. So, you know, to each their own. At the end of the day, when it comes to these levels marking, this is just the way that I have personally found for it to work, for me at least. You know, with the labels, you can label them whatever's going to let you know that is a 2-day prior open. You can write it out if that'll make it easier, whatever you want to do. But I do recommend labeling, you know, these kinds of lines, just so you know. I'm going to put, this is just orange, just a different color, so I know it's not out of my normal. It's an outlandish kind of target. And you can do the same thing for the downside. You know, go back a little bit, because we can't right away when we look at this chart, we don't see anything over here, right? We can't see any levels. So you do have to go back just far enough to start seeing some levels. Okay, you don't have to go way back. I just want to see, you know, where is the next common ground. Down here you can see where we had a push up, came down, came back up above that area, and as soon as we had the break, we have the retest, right? So that's kind of what happens in any given stock when it comes to going forward. Is that a marshmallow for me? Okay. Sounds good. Sorry, my kiddo coming down in here. Can you shut the door? Anyways, like I was saying, you know, you have the break and retest. Let's see if I can get the path tool. So break right here, you have the retest, and then continuation, right? So what I'm looking for here is that potentially this retest spot where we had obviously some support, you can find a nice common price in here. I would say it looks like it's right around here in the low 2018s, 2800 teens. And so that would probably be the next logical spot. So if we did come up into here, the 4-hour key level, and you wanted to take potentially a short position, you could position yourself like this. Let's just say price came back up in here. You liked what you saw. You can essentially look for price to go down. Your first target would obviously be the previous week low, because again, if it can't break that low, it's not going to go much lower. So even from here, we put our price target at the 2830s, and then we can put our stop loss. You know, at this point, I would say you don't necessarily want it to go back up over 2890s. It looks like the 2895 area. So I'm going to put a stop, I would say, at like 2998. You could, if you like round whole numbers, do it 2901, so that way you know if it breaks a psychological level at 2900, there's a good chance that we will continue onward, especially if it does break through this 4-hour key level, previous day high, and even if it comes down for the break and retest. You know, be honest with yourself at that point as it's moving up into this area. What are the actual probabilities that it's going to come back down right away? It's getting slimmer, right? Because we're breaking past a key level, we're flipping it from a resistance back to a support, so you got to be careful there. But this would be the ideal entry area if you were looking to go short. If things were starting to look good, you see a reversal style candle form, maybe it's a bearish engulfing candle, maybe it is more like a shooter candle, a shooting star candle, whatever it might be. Look for that pattern at this spot. Don't just hop in because it hits this level. You need to see something that shows you, okay, this is starting to look bearish. Once you see that, then you can go for the entry, and at that point you have the confirmation, you have the pieces put together that you've been looking for the bearish setup. So even if it doesn't work out in your favor, let's just say it does go up and hit your stop loss, you know, you took that trade in a good spot, a good entry with a bearish setup, bearish candle setup. You can use your EMAs at this point to see where are we on the EMAs. Are we under a 20 EMA, which you most likely would be at this point? Are we under a 200 EMA? You know, whichever EMA it is, and again, weight it based on, okay, are we on a smaller average, so a 20 EMA average with this candle on the 4-hour time frame showing the setup? Are we on the 1-hour time frame showing this setup? Are we in the 5-minute showing this setup? You know, at that point, you need to understand, okay, how long will this move potentially take? Do I have that time to be here? You know, so if it's on the 4-hour time frame, you're obviously likely looking at multiple hour, you know, possibly even like 8 to 12 hour move to play it fully out down to the previous week low or lower. So you have to understand that when you're getting into any play, not just with gold, but in general, you have to weigh out these things in your brain. So that's kind of the setup I'm looking for in this area. Come tomorrow, I am primarily looking short, but again, if I don't see confirmation in this spot as far as a bearish setup, I'm not going to take that short. Or I might switch my thinking maybe back towards taking a smaller time frame short. So if it's looking a little bit more bearish, or we get up into this area, I might go down to the 15-minute time frame, for example, and look for a pattern on that time frame, knowing that I'm probably not going to stay in the trade for more than like 30-45 minutes. You know, I really want to see just a quick fall off, and then I'll adjust my my risk to reward accordingly. So if we're up in here, it's on the 15-minute time frame, I might tighten up my stop loss, and I might raise my take profit to a more common ground level there. So, you know, it's still, like, even if I did that here, it's still looking like a 2-to-1 setup. It's perfect. It's exactly what I want to look for, is a reward of 2, risk of 1. So yeah, that's pretty much going to do it for this video, guys. I just want to kind of go over my thought process when I am trading in general, as well as specifically with gold here coming into this week, March 3rd week. So hopefully you guys find this video a little bit helpful. That's the goal here at the end of the day, is I want to make some helpful videos for you guys to hopefully understand the thought process of what goes through my brain. Now, this is with Forex. Obviously with options, it's a similar thought concept as far as with the chart and how I chart it out. But when I'm picking the options, it is a little bit different, just because you have to make sure you're getting the correct strike that's not too far out of the money, and you also need to make sure, based on what kind of play you're doing, you get the correct expiration. Because I feel like that's what people get messed up on, is they see a setup on the daily where it looks like, oh, this is going to go so much lower, but then they get weekly contracts, and the problem with that is, like, yes, if it hits, you're going to get a great reward out of it. However, the likelihood of it hitting are so slim, so you need to buy yourself time. If it's a setup that is on the daily, you need to be buying yourself multiple weeks out. So there's a little sneak peek of the video. I'm going to obviously put together a whole video for the options, kind of like a little options boot camp for you. Nonetheless, guys, hopefully you enjoy the video. Leave a like, comment down below, let me know what you guys think, and I will see you in the next video. Peace.